is yours.
Thank you very much, Eric. Well, I mean, this is a big subject, and we all know that pre-existing law recognised that paper can be possessed and transferred. And many of the most commonly used trade instruments that we've seen in the last century or a couple of centuries have been based on physical paper exchange. And whilst financial institutions have had, in some cases for decades, systems that allow for electronic issuance of trade instruments, this hasn't actually really extended to the actual exchange of electronic documents in order to obtain settlement or to mitigate risk. So if parties wish to possess or transfer electronic transferable records in the past, such as bills of lading and bills of exchange, the only real option had been to join a more or less private club where a contractual agreement could be put in place in order to enable such actions. Now, where the ETDA and Melita before it has taken us is into a world where it's now possible under law to possess and transfer electronic transferable records. Accordingly, intangible digital instruments can now be handled in the same way as the physical equivalent. But what needs to happen now is the commercialisation of this opportunity. For example, on the actual day that the ETDA came into place, Lloyds Bank completed a transaction under the new Act in order to settle a documentary collection for the purchase of garments. And also the Centre for Digital Trade and Innovation, which Chris will be speaking about later, is implementing pilots between the UK and Singapore, which will soon move forward into fully implemented solutions. Both jurisdictions have now in place similar legislation, which allows digital trade, and they've signed a joint digital economy agreement. So the aim is to test systems, develop a uniform, scalable approach for digitalisation pilots worldwide, and that will be in cooperation with the ICC Digital Standards Initiative. Now, these pilots will help operationalise the digital economy agreement, this framework between Singapore and UK, and it will operate under the oversight of government departments. Then subsequently, the idea is that pilot will be rolled out to other trade corridors. And I think it's worth highlighting the high-level governmental commitment around the world. This is not just the UK, Singapore, which I've just mentioned. A couple of years ago, the G7 declared they'd work together, and the idea was to develop greater adoption of electronic transferable records and identify any legal and regulatory barriers. And only a few weeks ago, the G20 committed to a set of high-level principles for the digitalisation of trade documents. And they've also affirmed that they're going to make efforts to encourage implementation and encourage other countries to consider these principles. The technology is in place, and has been for some while, to be honest, but taking it to an interoperable environment is now entirely feasible with the ETDA and similar initiatives. The fact is most trade documents are relatively easy to digitise. In fact, under the ICC uniform rules for digital trade transactions, even a scanned document could be considered as digital. But the problem up till now, as we've already mentioned, has been with electronic transferable records. And this is where ETDA and similar law comes into its own. Now, just a couple of final points before I pass over to Chris. I'd like to point out that the ICC Digital Standards Initiative has in place a key trade documents and data elements initiative. And their objective is to promote the harmonisation of digitalised trade documents and key data elements that are used in these trade documents. The aim is to drive greater adoption of existing standards. There's a collaboration between many trade and standards bodies and large corporates. The first batch of documents, which includes invoices, packing lists, bills of lading, is actually nearing completion now. And they're looking into issues such as whether these common data elements would produce efficiencies within the trade finance processes, particularly of banks. And if so, in what way? Also, what specific conditions, such as documentary security standards, must be met in order for banks to accept these data sets. And one issue they are actually coming across already is that some trade documents have multiple electronic versions. It can depend on industry, locality, internal systems, country requirements, all that sort of stuff. So reaching a synchronization may be a little awkward to achieve in the short term, although on the contra side, many of the data elements they have identified in commonly used documents are reused and repeated by participants throughout the supply chains. So interoperability can be simplified just by using transparent and trusted uniform standards. And as a final point, I think it's worth making you aware of a cross-border industry initiative, which is the ICC Digital Commercialisation Working Group, and that's actually reanalyzing existing ICC rules like the EUCP and the URDTT, and their aim is to develop a framework to drive commercialisation and adoption forward. And if we can achieve a shared understanding of terminologies or standards, this will enhance the digitalisation of documents, and hopefully a further benefit will be to provide improved access to various activation points for risk mitigation and financing. And having the ETDA in place will now greatly support and enhance these activities. So as an introduction, I think that's fine. So can now pass over to Chris.
Thanks very much, David. And sorry, I was a bit late struggling with the technology, which is a bit of an irony. Look, it's great to have the opportunity to come and speak to you today. I think the big news here is that English law has changed as of the 20th of September. What does that mean? That means that any company using English law no longer needs to use paper documents for commercial trade documents, e-bills of exchange, EBLs or bills of lading, promissory notes, warehouse receipts, that sort of basket of documentation that relates to the possession of goods. Perhaps more importantly is the English law change has totally transformed the legal environment internationally. We now have English law, Singapore law, and US law all aligned to the new, well, I say new, it's not that new, the UNCITRAL model law on electronic transferable records. And that means that 80 to 90% of all international transactions can now go digital. So that international environment, legal environment, has radically changed in the last 2 weeks. What does that mean? That means that 60% of global trade finance can go fully digital. It means 80% of bills of lading can go fully digital. It means marine, insurance, shipping, commodities, and every company using English law, Singaporean law, or US law can remove all the paper and now benefit from fully digital transactions. So what does this mean on a practical level for companies? It means cheaper borrowing, cheaper lending, cheaper interest rates, faster payment terms. It means all the cost efficiencies of removing paper, faster over-the-border processing times, and all the costs that are associated with that huge pain point for almost every company in the world, but particularly small companies who feel the pain the most. Here's a couple of good examples of exactly what's going on here. Anyone who knows trade and trade transactions will know that there are effectively 3 layers of trade. There's the finance layer, dealing with that financial transaction. There's the paperwork layer, which everybody has a real issue with. And then there's the physical shipment of goods layer, where goods are actually moving from A to B. That middle layer of paperwork is now being removed and being replaced with data. And those 3 layers are now collapsing into real-time transactions that are happening now in minutes, not months. So here's 2 examples. There was a recent pilot between Abacor, which is a UK SME trading sugar or buying sugar from Nicaragua and importing that sugar into the UK. They used an electronic bill of exchange and transacted in 2 hours rather than the standard 2 weeks to 2 months. Mellon & Co. is another good example of another UK SME. I think they're the largest importer of melons in the UK, but they have 65,000 hectares of melon growing in northern Brazil. They were testing electronic bills of lading, and became, by just simply removing the paper and transacting digitally, they were 15% more profitable. These are just 2 examples of many examples, which we will publish in a report on the 28th of November. But interestingly, we are now seeing transactions from the likes of Mexico to Chile on chemicals, Australia to China on iron ore, as well as the ones I've given you and many others. And every single one of those case studies, use cases, are demonstrating similar sorts of benefits. So what does this mean for all of us? Well, when we published the original legal reform business case for the UK and G7, we said that in the UK alone, this was worth 25 billion in additional trade growth for SMEs, 224 billion in efficiency savings, and 1 billion in additional trade finance. Actually, I think we've underestimated the figures. The government said 1 billion, to which we challenged back. But actually looking at our figures compared with what we're actually seeing in the market, I think we've underestimated just exactly how big this means for trade. And ultimately, what does this mean? It means we're no longer talking about digitalization of trade. It's happening. The only question now is how quickly can we scale? And we're already seeing companies who are not just testing, but scaling across the whole company and the whole global supply chain. So I think the challenge now for companies who are not involved is there is an urgency to the task. The commercial benefits and the ROI are really clear. For those governments that have not reformed laws, I think we'll see a shift of companies onto the legal systems that they can use, English, Singaporean, US, until those laws are in place on a local level. We haven't seen a single example of any government pushing back, saying they won't accept electronic transferable records. We're also hearing strong messages from the likes of China that there is no conceptual issue with any of this, i.e., it's unlikely any of this will end up in a court, in a dispute case. So we're being very bullish that actually we can get on with the task. And it's now down to companies and corporates to start to utilize the benefits of these tools that are not just trade related, but also finance related. And then my final point around this is we're also seeing the emergence of new public utility architecture for trade in the wake of TradeLens, Marco Polo, WeTrade, commercial initiatives that tried to create scalable architecture for trade. For whatever reason, those didn't succeed, whether that was design flaws or legal barriers. Now we're starting to see a public law environment in which trade digitalization can scale. We are, we've obviously seen for the last few years, Trade Trust in Singapore offering a public source, open, interoperable framework to handle commercial trade documents at low cost. And that's important because that's a useful mechanism for those companies that want to use that sort of open source approach. In other words, it's more choice. And then we've got obviously a raft of commercial providers in this space like SDocs or Inigio or Bolero or any of the other commercial providers who are already operating in this space as well. So technology is not the problem. There is public utility architecture already available. We're working on a reliable systems framework for global trade, not just UK trade. That should be in place by this time next year. And that will do three things. It will meet the provisions of the Electronic Trade Documents Act. It will transition the approval system for the marine insurers, the IGP and I clubs, over to us. And we will set out what the interoperable standards will be, as David has quite rightly pointed out from the ICC Digital Standards Initiative. In other words, what we will say is reliable is also future-proof in terms of being interoperable. And then now the focus has to be on the cargo owners, the corporates, to work with these crucial companies who are the buyers and sellers of goods to scale all of this approach up at a global level.
Yes, by the way, I have issues today. Can you help us? Exciting news, absolutely. Appreciate the feedback. I don't know if you want to handle a quick question since you're on the topic. I have Jonathan who's asking when the United States signed up for ETDA. Is that fairly recent?
No, the US is interesting because the UNCITRAL Melita framework, as it's called, was actually modeled on Delaware law. So Delaware law has been in place for a long time. New York law is also compliant with the Melita framework. And now we have the Uniform Commercial Code in the US, which is also compliant and going through the process of state adoption to that federal framework. So you've got three options in the US, but there's no legal barriers in the US at all, providing you're using one of those legal frameworks.
Yeah, I'm participating in a session with the IIBLP tomorrow on Thursday afternoon, and this is one of the topics. And there really is great interest in how we're taking this forward in the UK. So they're following us very closely.
And all I would say is that the US is obviously interesting for lots of different reasons, but I also wouldn't underestimate the influence of UK Singapore. There's an enormously strong tie-up between these two Atlantic and Pacific trade hubs, where we're very much focused on the inclusion of the whole trade economy. We're very conscious that, you know, US, China, EU are the big players in trade, but sometimes it's much easier for the intermediary players like the UK and Singapore to start to devise, you know, pragmatic solutions that are scalable for everybody. And the interplay between UK, Singapore now is really interesting because we all started on this 5 or 10 years ago, but we're all converging on similar solutions, particularly around public utility architecture, to make this much, much more accessible and much lower cost for as many companies around the world as possible.
Thank you very much, Jonathan. I hope that answered your question. I also have a question from Jose, unless some of the panelists want to attack a different topic. And I see that Nick has joined us. Welcome, Nick. A question from Jose here, and I think, Chris, again, you touched on it. What's the estimated internal cost of changing the architecture in a business to digital for the average SME?
Yeah, that's a really good question. So what we're trying to do here is we're trying to present solutions that don't require massive IT infrastructure investment. There are already commercial providers, as I've mentioned. When we talk about trade trust and public utility open source code, that will require to some degree building around that public source code for those that want to go that approach and build their own systems. But we're acutely aware that we are not going to make this happen at scale if we're asking every company to invest in a new IT infrastructure. That's not what we're saying at all. What we're saying is you can actually do this tomorrow at scale across your own global supply chain without any cost to your existing system. However, in the future, you may well want to design more effective and efficient systems built around your own system as you choose. But absolutely, this must not be a barrier to legacy systems, which we appreciate are in existence in every company, particularly for banks. That can't be part of what we're asking. We have to say, what's the solution today? How do we do that tomorrow? And then the legacy stuff will wind out over time, I think. But that shouldn't be a barrier in terms of what we're talking about.
And it does also lead on to a very, very important topic that I've seen quite rightly raised all over the place, is the role of SMEs. We have to make it accessible to SMEs at a cost they can afford. And very importantly, and this hasn't yet come across to that market, for them to understand the benefits of why they should move. So this is on our deck. Everyone knows about this, but if we don't get the SMEs in play, then it ain't going to work.
Yeah, just to that point, it's very important. So the end beneficiary has to be the SMEs, and it has to be SMEs all over the world, not just in the UK or any particular jurisdiction. You will see us putting a lot of focus on big multinationals, big corporates, tier 1, queen bee, they're called by different names. The reason we're doing that is very tactical. We are focusing in on 5 key sectors: retail, food and drink, commodities, automotive, pharma, for a very specific reason, because our task as a convener and market catalyst, if you can put it in those terms, is to get to tipping point where all of this becomes the norm as quickly as possible, and then the market will drive itself. And obviously, working with those big tier companies, you can get down to the SMEs with the right capability and support. But ultimately, this has got to benefit SMEs in every way, shape, and form. But the starting point can't just be every SME in the world. Otherwise, we'll be here till 2072. What we've got to try and do now is get to tipping point in the market where it just becomes the norm. And the corporates and their supply chains are obviously a key part of that. And that's why we're focused so much on that group.
Eric, the next question you had up there about the aspects of electronic documents, I think that's probably an ideal time for Sarah to jump in, talking about in writing and signatures, for instance. I mean, my quick answer to that one is that English law already caters for this, which is why it's not in the ETDA. But Sarah's the legal expert on this side of it.
Yeah, thanks, David. I mean, that's absolutely right. The idea with this particular act was, basically we wanted to make sure that English commercial law was fit for purpose. The law of England and Wales, I should say, was fit for purpose in terms of accommodating these electronic documents that people were already using and obviously wanted to use for all the reasons that we've already discussed. But what's really important is to remember that the commercial law of England and Wales was already very effective. And when you're conducting law reform, one of the things that you absolutely don't want to do is break it for the sake of trying to make a little change, little in terms of technical adjustment, huge in terms of its effect. I mean, that's what Electronic Trade Documents Act does. It allows, as David's already said, it allows for the first time electronic documents to be treated legally in the same way as paper. So in a sense, it took 6 substantive sections of this act to achieve that. So in that sense, it's small, but I've described it before as laparoscopic legal surgery. What we wanted to do was go into the commercial law system that we have that works so well. It's worked, it's used across the world. We wanted to make sure that we only did absolutely what was necessary so as not to break things that work perfectly well. And as David has already said, electronic documentation and writing is already perfectly accepted. You can use an electronic signature under the law of England and Wales for almost everything. There are a few statutory exceptions where there is some extra validation that is required. But for most commercial documents, that was never the problem. It was never that this writing could not be in electronic form and it couldn't be signed. I mean, you can sign something quite honestly by putting ink on your hand and slapping that on a piece of paper or on some sort of electronic sensor. If you have the intention to authenticate a document and that's why you did the stamp, that's a signature. It's not quite as or it's not nearly so limited as many people think it is. So we just didn't have to change that. That was already okay. The thing that the Act does is basically just says, what is it that's so magical about paper? Why have we used that for hundreds of years? And then it says what all those things that have that sort of legal alchemy of paper, that you can hold a piece of paper and it can give you rights over the goods to which it relates or over the payment obligations to which it relates. And you can pass that on, those rights on, simply by passing the piece of paper. That's incredibly effective. We can now do that in electronic form, and it just required this act for the law to recognise that. So that's what it did. It focused on that very small but hugely significant legal question. The other thing I would say, whilst I'm on that point about what the Act did, and the first principle of the Act was where you can replicate paper in electronic form, then the law will treat it in the same way. And that's all it's about, is just replicating paper. I've said it before on a similar panel that it's paper but better. It's all those good things that paper has done, but it's better because it is more efficient. It's less harmful to the environment. It is actually easier to prevent forgery and to prevent interventions and prevent duplication. So That's what we're thinking about, paper but better. Quite a few of the questions that I get and have got since the Act came into force are about the reliable systems criterion in that Act. What I would say about that is, and it's, I suppose, to some extent inevitable that people are fastened on it, but what's really important about that reliable system is it's a means to an end. The end is, can this system replicate paper and do it in a way that is regular and consistent? And that's all that reliable systems point is supposed to achieve. Now, of course, initiatives like the one that Chris has mentioned, where we have benchmarks, where we have guides for what a reliable system will look like, it's going to be hugely, hugely helpful, because that will provide reassurance to the industry. But there isn't only one way of making a system reliable. And that's why we didn't put it in the Act. We didn't say a reliable system looks like this, because we might well be able to say today what a reliable system looks like. But in 4 or 5 years' time, they're going to evolve. We want them to evolve because we want them to be as reliable as possible. So we didn't want to ossify that in a statute. I'm well aware I could talk about this for a very long time, and I am not going to. I'm happy to answer any questions. I'll probably leave it there, except to say that what is really key now, Chris has already made this point, but I will reiterate it, is that replication is now possible as a matter of law. What's really, really important is interoperability. If you can find a solution that means one reliable system can talk to another reliable system and they can transfer these documents between themselves, that's where we want to get to. We don't necessarily want all one system. We don't want one definition of reliability. We want it to be interoperable in that sense.
There's actually a question just come up with that as well, like how will the different digital trade platforms work together? And I guess the answer to that is what we were touching on there, Sarah, but it's all about standards as well. If we have that uniformity, they can talk to each other. It's that simple. We haven't got that yet.
Yeah, I mean that's absolutely true. What David said, I don't think it's necessarily, well, it's never going to happen that we're going to have one system, but I don't even think that would be desirable, because they all do different things within different jurisdictions. The real key is making sure that they are compatible. They don't have to be identical. We don't want them to be identical, but we definitely want them to be compatible in the way that the systems that we're all used to using every single day largely are. You can send a document from one device with one platform to a different device and platform fairly easily. And we need to get to that point, really. It's about finding the key that can enable, or keys that can enable that to happen. Excuse me.
And maybe that's a good opportunity, time for me to come in then and just give a flavour of what we're trying to do next. So you've had the background there from Sarah, and she's absolutely right that the Act changes very little. It certainly leaves untouched all that rich vein of common law and precedents that has grown up over the years about how to treat documents, effective control, possession, all those sorts of things remain untouched. And all it does is really enable a digital version of a document to be the equivalent of its paper. But we felt, and I think this was the thrust of Sarah's explanatory notes that went alongside, or from the Law Commission that went alongside the Act, was that I think both this providing community and the potential using community need just a little bit more help than that. So what we're aiming to do here in the Centre for Digital Trade and Innovation is to really take that guidance that has been provided by the legislature to the judiciary about what a reliable system might look like, or could look like, or the factors to be taken into account in judging of a system's reliability, and take that just down a little bit of a level to develop two things. One is a model against which suppliers can evaluate themselves effectively in pursuit of that sort of label of reliability. Now, we don't think this is going to be a hugely new or difficult task, in the sense that there are lots of systems out there that are probably already reliable under the terms of the Act. Although it's not for us to say definitively whether they are or not, because that will be for a judge in the event that the issue is tried at law. But broadly speaking, we think that some of those systems, particularly those that are already handling e-bills under the EBLs under the terms of the 10 Commandments, as they call it, from the IGP and I clubs, they're probably already reliable. But they will also be operating under standards. I'll come back to that in just a moment. But the second, so that's a model for potential suppliers to aim for. It's something that they can use as a checklist and say, yep, we meet those requirements, those sort of criteria, and then we can badge ourselves as being reliable. And by the way, it's not a formal certification or accreditation process. It's more like a sort of informal assurance process, whereby platforms or systems can offer themselves up for assessment under against those that framework, that model that we will develop, and we will be able to say yes, they are reliable for as far as we know. Although the ultimate test will be at law. And then also what we want to do is to develop a public registry of those systems that do meet that model, so that any potential user, and this is particularly for the SME sector, if you're a very big multinational, you may well develop your own reliable system to deal with your documents. There's nothing to stop that happening. But for the SME who is struggling just to keep their their business going, they need some sort of indication of whether system X, system Y is actually reliable, and whether they will enjoy the protection of the Act should they use it. So what we are proposing to do is to, as I say, have a publicly available registry of those systems that meet our model, and can then provide a level of assurance to those potential users that a system is indeed reliable. As Sarah says, we are not saying that we're the only way to do that. There can certainly be other mechanisms towards reliability, but we think that there's some benefit to industry at large for there being at least one sort of generic and utility sort of market infrastructure, as I think is the phrase that Chris used, but a utility mechanism for the establishment in advance of a court case of reliability, and to give some assurance to, as I say, those users who are keen, and there's quite a lot of them out there, who are keen to take advantage of the terms of the Act and get on and trade digitally. So we will be doing that over the next 12 months. We're not claiming any particular authority as such, but what we are aiming to do is to develop that authority from a consensus across industry, that they recognize the model and they recognize the legitimacy of our approach. We will continue to consult with Sarah and her colleagues in the legal profession. We will certainly continue to consult with actors in the supply chain, shippers, carriers, ports, and so on, but also the banks, and of course, critically, the insurers as well, to ensure that there isn't any fundamental change to the liability frameworks and so on, and all that law and legal process that has grown up around these things in the future. But again, to iterate critically, people will adopt this if there is direct financial benefit. I don't think they will adopt it just because they can, or because there's some whizzy tech in the middle. We need to demonstrate that there is real-time benefit to both large and small operators for doing more digitally. And that's a combination of both immediate effect, which is the profit and loss benefits that can be realized in some of the examples that Chris gave. But longer term, I think we think there are also benefits around trade, supply chain reliability and security, demonstration of ESG compliance and sustainability, modern slavery, and all those sorts of regulatory compliance issues that are heading the way of trade as trade becomes more accountable to regulatory authorities. So short term, let's get those pounds and pence benefits. Longer term, let's keep those broader strategic benefits in mind. But we think that's the way to go. And anybody and everybody at this stage is a stakeholder. So we'd welcome any feedback. We've got 3 documents that are already out there, which please feed back to us on. But we will, in due course, be exposing our first version of the model, based largely on pre-existing standards relating to things like cybersecurity, security of access, integrity of data, hard and software security, and so on. Pretty much basic and housekeeping stuff, which many platforms will already be compliant with and will all be very familiar with. So we're not starting from scratch here by any means. And what we are critically, the final point, what we really are keen not to do is to have any hiatus. There was a serious risk that that we got the act passed, that Sarah got the act passed, and then it just sat there on the statute book and nobody took any notice of it. Fortunately, thanks to the efforts not least of Sarah and Chris and David, that hasn't happened. We've already had some transactions undertaken between the UK and Singapore entirely digitally and taking full advantage of the Act's provisions. And that's in just the 2 weeks that it's actually been on the statute book. So, and we hope to build that out as well through the report that we'll be publishing in November. So the scene is well set, the tools are there. I think the willingness and the ambition is there. All we need to do now is to coordinate the effort, and I think we could really make a big difference. Thanks very much.
Absolutely, Nick. I think the industry is more than ripe to move all this forward. Thank you very much. I do have a question from Chitan. What's the biggest impediment in a much larger adoption of accepting digital documents beyond just a few pilot transactions? I see Chris raising his hand.
I can answer some of that. I mean, I think it's a really good question. That I think some of this is a lack of awareness. I think some of this is about mindset and culture. Those are probably our 2 biggest hurdles right now, is that we've been trading in a very certain way for 200 years, which we're all very familiar with. And the truth is that the trade system is not broken. It's just very inefficient and very antiquated, but it kind of works, albeit it's slow and it's very inefficient. And so I think there is a natural tendency to always revert back to what you know. What we've now got to try and do is try and educate the market to say, actually, we don't need to do that anymore. We can do this so much quicker, so much faster, and so much simpler than we've ever done before. This is a once in a generation opportunity, to put it in context. This is not, something that's a small tweak of the global trading system. This is about a fundamental transformation of the way we trade. And it should be no surprise that we're all focused on the digital environment, because that's the next 100 years. So that system that we designed together 200 years ago is no longer really functional, because we've all moved into a new technological environment where solutions are so much quicker and faster. And there's no better example of that than the one I gave earlier on. When you can transact in 2 hours rather than faffing around with documents and aeroplanes and postal systems and waiting and cross-checking. Why would you do that? And all the risks that are associated with that, whether fraud or delays or disruption, when actually you can do all of it securely, all of it instantly, all of it in real time. You know, to anyone under the age of 40, none of this makes any sense, by the way. Just to put it in context, that's another issue, is that many of those making decisions are, you know, over 40, let's put it, and I'm one of those, by the way. You know, it's a generational issue. You know, in parts of the world like Africa, they're already transacting and have been for some time on mobile phones. They're using WhatsApp. They're using much more mobile friendly, faster, much more modern ways of trading by just being more pragmatic and having the systems in place. What this allows us to do is just to bring the trading system into the 21st century. That's really what we're talking about. But there is a lot of education to do here, a lot of assurance to make as well, that this is not as scary as you think. There are lots of use cases already in place. There'll be lots more coming, where every single one of those use cases is delivering huge ROI. This is not small numbers stuff. We're not talking about, you know, 1% here or 1% there. We're talking about massive numbers in an area that we know is extremely painful for companies who are trading, particularly SMEs. But also the big companies are wasting an awful lot of resourcing on shuffling bits of paper around. Why are we doing that? It makes no sense. We don't need to do that anymore. On Monday, we can do it differently. It's that easy, that quick. The solutions are already there. It's now just about decisions and doing it and scaling it.
Yeah, just to emphasize a couple of things there, I fully agree with Chris. There is definitely a lack of transparency out there, but webinars such as this are addressing that, and there's lots more to come. And the other thing is, and Chris touched on it, is my favourite phrase, the inertia of tradition. It's the way we've always done it. We don't see why we should change. Well, we're going to tell them why they should change, and we're going to prove why they should change. And the use case that the ICC UK bring out at the end of November will help provoke that.
I think it's partly as well. I mean, the people on this call will have heard me say this so many times, but I think there's a reason why it keeps coming up, is that people are, of course, always averse to unfamiliar risks. You know, we've said before that electronic documents, I think in aggregate, present fewer risks than paper. You know, if we were starting from here where we are now, nobody would say, oh, let's, you know, transmit these rights through paper. That seems like a really good idea. People would think you were mad if you suggested that now, given the electronic options. But of course, electronic documents present unfamiliar risks. And at the moment, that's what leads to, I think, the inertia of tradition. And I think once those risks, because of course there are some, albeit that they're much lesser than paper, as soon as those risks become more familiar, I think it will gradually erode that inertia. Well, I'm absolutely confident it will.
Also above.
Yeah, I think the point that Sarah makes there is really important. I mean, you know, anything new, it does take a while, right? You know, we've got to get over this sort of hump of uncertainty. We're not quite sure. It's a little bit new, a little bit different. You know, I think if we're followed by the evidence, which is what we should be looking at, this change is much less uncertain than we think, and it's much less scary than we think, or at least the public perception of what people might think is the risk is actually not there. There's very little. I haven't seen any evidence to date of any electronic transactions going to court. I haven't seen any disputes. I haven't seen any evidence of anything that doesn't say that this is just straight up commercial benefit to all parties involved. Everybody wins. That's the beauty of it. There's no downsides here. Everybody wins, all the actors in trade. And that's one of the big barriers to changing anything in trade, is that there's so many different actors and everybody has to feel a bit of that benefit. Well, this is a great example of that. And all the evidence says that's true. Yes, we need to provide more use cases. We'll do that over time through more jurisdictions as more get involved in it. But there's no evidence to say that this is anything other than upside, and significant upside. If we want growth, we want trade flow, we want jobs, we want investment, all these things that we need for our economies and our companies, this has got to be the obvious low-hanging fruit.
There's another question there about how we would update the trade finance community about developments. So would there be a web page with country-specific updates? I am aware that the ICC DSI already have updates on later developments and how it's rolling out throughout the country, throughout the world. But I know, Chris, Nick, perhaps you want to say about how what we could do from ICC UK.
Yeah. So, sorry, Nick, you want to update on the UK. So on a global level, on the DSI website, Digital Standards Initiative website, there's a great tracker there. It's called the Melita Tracker. And that gives you a very clear sight of everything going on in the legal environment worldwide. That will change quite significantly in quite short order, just to be aware. So the countries you see who are compliant with Melita today will include the G7 and China in the next couple of years. Germany, France in particular will probably be first, but China are not far behind. Japan are also working on legislation. The whole of the WTO e-commerce group, which is 90% of world trade, will all be committed to Melita compliant legislation, hopefully by February next year. So that tracker, just keep an eye on it because it's changing literally every 3 months, every 6 months. That's a very important tool for all of us. But, I think those of us who are very much in the implementation space, like Nick, me as well, we're working as hard as we possibly can now to build up that evidence base because we're very conscious that at global level, most countries are working on law reforms. And there's not many of us who are now actually implementing this across global supply chains. So keep an eye on the Digital Standards Initiative website. We're going to feed as much public information onto that website as we possibly can and as quickly as we can, because we're trying to help carve that path out as we did on legal reform, but this time on the implementation side.
Just to let everyone know, if you look at the chat box, I've added the web address of the tracker, so you can find it.
And just to say, we're backing that up with real world pilot transactions with a number of jurisdictions, obviously Singapore, but with Brazil, with South Africa, with the Netherlands. We're looking at Germany and hopefully with the US as well. But again, just to iterate another point, I think both Chris and Sarah made, we saw an example of a transaction of an oil tanker going from Houston, Texas to Chile under Singaporean law. And they chose Singaporean law precisely because they could do it digitally. So I think there's a trend when you think that Singapore, England, and now the US are all heading in that direction. That's what will happen. And a significant proportion of global trade is governed by English law anyway, because they like to take advantage of our sort of legal system and jurisprudential lead. And that we are in a pretty pole position, I think, to really make the change here and to develop our leadership in that area.
Yeah, it's interesting on common law. If you look at the countries who are actually compliant with Melita, there's more common law countries who are compliant at the moment. And we're expecting that network to grow once the Commonwealth program kicks off next week. It's quite interesting, but we're obviously very focused on working hard with the Germans, the French, the Italians, and other civil law countries to help make sure that they have all the support they need to also be compliant. They are working hard. For whatever reason, common law countries have gone first. I'm not quite sure I understand all of those issues. I think some of it's just down to the relationships and the regulatory cooperation that goes on. But it's really, really important that we have a sort of mixture of different legal environments here. That's very much part of the approach going forward.
Yeah, I mean,
we
it's
are
probably
coming up
worth
to
saying, and this will be obvious to some people who are listening and not others. So apologies if you're one of those two. It's already obvious, but it's not the case. And I have had this question before now. It's not the case that you can only use this act or use Melita or any of the reforms that have happened. It's not the case that you can only use those if you are trading with somebody who is based in a country who has, or a jurisdiction, I should say, who has made those reforms themselves. That isn't the case at all. It's quite complicated how it's worked out, and I'm not going to take everybody's time up with it today. But essentially, what's important for the purposes of these reforms is if the transaction is is governed, or the status of the document is governed by a law that has had those reforms, then they can take advantage of them, and that has no necessary link with where those parties are based. So don't feel like you can only take advantage of these reforms if you're using a certain trade corridor. That isn't the case.
Yeah, that's completely true. Nick's given a good example of that. There's another one coming, by the way, of a big iron ore trade between Australia and China. Neither Australia nor China have Melita compliant law in place at the moment, but that trade is happening under English law, and there's no dispute on either side in either government of that transaction taking place. But it's a good example of what Sarah's just said. It's not jurisdiction dependent here. It's more about law dependent, and then using the laws that enable you to transact and using and capitalizing on the benefits. That can all happen now, especially with English law changing.
But there is a paragraph in our DEA with Australia that says that we will not invalidate, and they will not invalidate any document under English law because it is digital. So sometimes what actually happens in MLATR is given practical effect through treaties.
I think the central point here is the world has changed. And the world has changed actually quite radically in the space of 2 weeks. This change in English law has really changed the legal environment in a way that we've never seen before. I think that, if there's any call to action here, is we can now transact internationally and digitally. There are no more legal barriers. So let's get on with it and scale it up, because the benefits are very clear. It's now about all of us working together with our corporate clients, the ship owners, the cargo owners, and everybody else involved, just to make it happen. But that legal barrier that we've talked about for years, decades actually, doesn't exist anymore. It can happen all now, as of today, whatever day it is, Tuesday, Wednesday, Thursday, Friday, Monday, you choose, but it can all happen.
Like you said, just let's get on with it, right? Make it
Absolutely.
happen.
I've always just had 3 words: data, not paper. That's where we go.
Not paper.
Paper, but better.
Paper, but better. I like that one. Yes.
All right. Thank you very much, folks. I'd like to echo someone who put in the chat. Thank you for all your great work. I'm sure that you've been working very hard on this. The community appreciates it. Again, for an old folk like me, I appreciate it. It's been a long time coming. Also over 40 and over 50, Chris. So appreciate you aging me a bit there. But thank you once again to our panel. Fantastic. Thank you to our guests, our participants. Great questions. We apologize we couldn't get to them all, but I'm sure we could have gone for hours and hours still. Again, thank you very much. We will send the recording of this to the folks who couldn't attend. If you have questions, shoot them our way, and we'll try to have them answered for you. Thank you, and have the great rest of your day.
Cheers.
Bye.
Bye.
Thanks, everybody.
Cheers.